banks, which at least provides a platform for future fundraising, that there is a potential then for the government eventually within possibly the next 12 to 18 months, it's theoretically possible that these banks could go and independently fund and pay back to government and again move on and supply liquidity back into the system in the next 12 months. Where nationalisation, we just put it all into the national balance sheet.
Well, I mean, I just say in terms of bondholders and being able to attract bondholders, if we look, because a lot of people have talked about the Swedish model, and certainly when they initiated their plan, it restored international credibility quite immediately. The problem here is that we don't have the political support and unity that they had in Sweden from the outset.
Albert O'Flaherty, you asked the question.
Yes. I think it's probably a reasonable suggestion. I mean, none of the options are very palatable, but at least going forward, it provides some balance sheet transparency and hopefully in the long run some confidence in these banks. Again, none of the options are very enticing.
Any other brief comments?
Murray Gaffney. Do you think the options would be better analysed if we distinguished between the domestic banks into what we would consider systematically important and what we would consider not, and to look at different treatments under both those scenarios? Say, if we look at the UK, for example, where RBS obviously had a different treatment than the likes of Bradford and Bingley.
Would you like to take that? Marco?
Well, I suspect effectively that's what they're doing already. They're taking the two key banks, AIB and Bank of Ireland, with this whole NAV thing. So they're focusing on the ones that they consider most important and take it from there. They can't just look, they have to start somewhere, and I think it's a start.
I think you need to have a vision for the banking
sector.
Right. Yeah. I think you need to have a vision for the banking sector, what it's going to look like 4 or 5 years hence, and there are a couple of issues here. One is the banks are all in different states. It looks actually like Bank of Ireland may not need, even after the write-downs, may not need further capital from the government, for example, whereas AIB clearly will, Anglo will definitely need a lot more. But the other issue is the competition, which will clearly have lessened from the foreign entrants. From everything we can pick up, they've really battened down the hatches and they've sort of given up on Ireland. So I think you need to look at that and say, well, if these banks, if AIB and Bank of Ireland are systemically important banks, and Irish Life and Permanent, say, as a mortgage bank in behind, or at least that part of it, are they going to have maybe an easier ride to get back to health because competition is going to be lessened? So the government can maybe look at it from that angle. They may have a different view and say, well, competition was good in some sense. It was disastrous maybe in terms of the construction bubble, but lots of other businesses may have benefited from cheaper funding in recent years. So I think, I think the government needs to make that decision.
Thanks, Russell. I want to get more views, if I can, from the floor. I know Brian is coming in here now, but can I ask you from the floor, give your own views rather than ask a question, because otherwise we'll have to listen to the same people all the time. So, Brian, can we have your view?
Brian O'Loughlin. It seems to me that NAMA only makes sense if the value of the assets transfer into it is at a price that it doesn't damage the capital of the banks. And the recent rise in the bank share suggests that's the view the market is taking. In other words, that the value, I suspect, would be way too high as far as the taxpayer is concerned. And really, in my view, and I would be interested in the panel's view, is that ever since this crisis started, the bankers, the politicians, the brokers, analysts, economists and banks have been in denial about the true problem. And I think they still are in denial. So I think NAMA really is a bad solution. It only works if it's another fudge.
Thanks very much. We had another comment over here.
Hi, Paul McCarver. I'm surprised that we're actually still talking about whether or not we should nationalise the banks. They should already be majority owned by the state. The state put up 7 billion of our money at a time when the two main banks had a market cap of 1.7 billion and were only continuing in business because of the state's guarantee of the liabilities. And when there was no other providers of risk capital. This was an appalling deal on the part of the state to end up with at max 25%. We should already own 3/4 of the two main banks.
Any other comment? Okay. Oh, sorry. Yes.
Evening. I have a question. Can I ask a question rather than offer an opinion, if I may, on the same subject matter?
Can you tell us which
Briefly.
panelist you'd like to answer it?
To all six. I'd like to take the opportunity.
We don't have time to go through a question.
Yeas or nays? A quick yes.
I'll put it to one of them.
Okay, that's fine. Regarding the topic raised by this lady here regarding the differentiation of the Irish banking sector or the different banks within it, and remaining on the topic of NAMA, but taking it just to a pre-NAMA stage, back to the 30th of September last year, when the government offered the guarantee of the banking sector's liabilities. Can I just ask the panel, or one member of it, whether there was an alternative to actually rescuing all 6 banks, and whether it may have been a wiser course of action just to rescue 4, say, 4 conventional banking models, 4 conventional banks, rather than the special purpose banks, which, if that was an option which the government could have taken, might it have just reinforced the value of the guarantee provided by the government at that time, and might have also saved the taxpayer a considerable amount of money. But was that an option? I'm aware that capital flows, one might say, might have been interrupted.
Okay, we have the question. Can we put it to Kevin?
Yeah, I mean, I think there's 2 questions there, really. There's one, should we have guaranteed the systemic important, the really vital banks for the economic system? And then second of all, should we have guaranteed the other 2 or 3, depending on which way you categorise the banking system? I think that there was no option left. I think we'd reached a point of no return in the capital markets, that we'd reached such inefficiencies. We had the short selling bans that had already been brought in. We'd brought in pretty much everything else that could be done at that stage. And the fall of Lehman's created such reverberations around the banking system right across globally that we were at the point of no return. And I think that very quickly followed. We saw every European country follow Ireland in exactly the same course of action. It took the UK a week to come to the same conclusion, that they must guarantee their banking system. Now, the argument would be, did Ireland force the world to follow its path, or did Ireland actually preempt what was going to happen inevitably anyway? But if we didn't do it then, we would have had a collapse in the banking system, and then Europe goes and puts in its guarantee scheme. But we're in an Icelandic situation at that point. We couldn't take the gamble, and I think it was a necessity that they did at that point in time.
Can I move on to our next topic? David Hammond, I believe you have a question for us.
Thanks, Ronan. I'd just like to ask the panel what they think is the optimal balance between taxation and spending to try and get us out of this particular mess that we're in.
Sounds like it might be Ross's department.
I'll be brief on this. I think to an extent we battled it a little bit on what we've done so far. I might say finally we've got a plan in place, but I wasn't convinced by the mix of it. If you look at the best way to get your public finances in shape historically, and the European Commission themselves have views on this in the paper in 2007, would suggest that you need to focus more on the spending side than on tax. We've done the opposite. If there's any other authorities more pro-cyclical, you might say, than the governments, it's perhaps banks. They tend to spend it in the good days and then slam on the brakes in the bad days. But then by slamming on the brakes, they often take the wrong decisions. I think we've done that. I think I have two problems with it. One is the capital programme. We shouldn't have slashed it as much as we did. I do think, and it'd be interesting to get Marco's views on this, I do think that bond investors would be willing to pay to finance your capital program if they thought you were generating a greater return than the rate at which you were paying for the interest in those bonds. And I think we shouldn't have gone so far there. Every other country is doing the opposite. But on the spending side, we definitely haven't cut public sector pay like we should have. And we can have our own views looking at the data that we have from the National Employment Survey, but the ESRI are independent, and they said that there's a 20% plus public over private pay premium at the end of last year, and that includes bonuses. Now we've done 7.5%. You can call it a pay cut or not, but the more needs to be done there. And I think the evidence over time is that spending cuts need to do the bulk of the work. For a couple of